Now, I'm not sure if we should do this video or not because what I'm about to tell you may sound way too unimaginable. But the truth is that after learning this one particular insight about wealth creation, we are able to draw a conclusion that 100 crores of net worth is actually achievable in one's lifetime. So, if you're really interested in knowing this, please watch this video till the end because I'm sure it is going to be totally worth it. Now, everybody knows this, that this can't happen without the magic of compounding. Compounding is, the eighth wonder of the world. But obviously, compounding is what you need in order to create such a high net worth corpus. But what I want to tell you today is something a bit different. Obviously, compounding will come in this picture. But what I need to tell you here is that wealth creation also takes, goal settings, right? Now, in before jumping into this topic much deeper, what I want to make you understand is the importance of goal setting. Now, go back to your school or to your college. Let's suppose you're preparing for an exam. Let's suppose you have a goal that you want to crack, let's say an IIT or an IIM, you want to prepare for CAT or something like that. Now, obviously, your bigger vision, which is let's say, is cracking a very good college or to pass out this exam. But that's the big vision, right? In order to achieve this vision, what everybody does logically is that you divide your goals into smaller goals, right? You will have quarterly goals for yourself. You will even have monthly goals for yourself, and you will even have weekly goals for yourself. Once you have them, the vision, let's say, gets broken into smaller pieces and it starts to look like that this is much more achievable going forward. Similarly, when we hear big terms like 50 crores, 100 crores, 1000 crores, this is what happens to a brain, that because they seem too big, too larger than life, we just can't really imagine them happening in our lifetimes, right? So the idea should be that you should think about a longer term vision, which is let's say about 100 crores, but you should think about today and tomorrow, right? So what I typically mean here is that you should have your goals broken during your entire wealth creation journey, and building, working on them step by step, you can eventually reach there, right? Now, next, I'm going to tell you, what are some of the important pillars and insights that you need to know in order to chase a 100 crore net worth. Like I said, goal setting is really important. And once you, let's say, have, small goals and some, let's say, some quarterly goals or let's say some yearly goals in between, you can eventually think about, how that bigger vision is going to be achieved. It will also help you imagine, why, 100 crore of net worth is actually achievable in our lifetimes, because I'm not talking about 2024, I'm basically talking about 30, 40 years in the future, right? Things can be drastically changed over a 30, 40-year period of lifetime, wherein, finally the magic of compounding starts to set in. Now, for example, let's suppose you've achieved, let's say, a 1 crore corpus by the age of 34, 35, right? It can be here and there, but let's assume that this is the number that you've been able to achieve, right? Now, let's suppose you're investing this 1 crore corpus and you're able to compound your wealth, let's say, at 15% per annum, right? Now, when you compound your money at 15% per annum and you have invested 1 crore, what will eventually happen is that you will reach your 10 crore corpus in, let's say, in next 15, 16, or maybe 17 years, right? Now, 1 crore to 10 crore journey, you basically added 9 crores in 16, 17 years. Now, this might not sound, that big an achievement, but what will happen, let's say, in the next 16, 17 years is that you will add roughly about 90 crores to the 10 crore corpus. So, what you've eventually done is that you've been able to achieve a 100 crore corpus, let's say, in a period of 35 to 40 years, maybe, right? Now, while looking at this example, what you should really observe is that the compounding, the real compounding, that is something, even Rakesh Jhunjhunwala used to say, that you will hear about the most successful investors in their late 50s or maybe, once they've reached their 60s. Because the real compounding benefits you get to see in the long term, right? And that long term is basically really long term. This long term is not like, let's say, about 5 years, 10 years, 15 years. What they're basically referring to is that long term really means 30, 40 years. So by looking at this example, that how, let's say, by generating 15% per annum, you go from 1 cr to 10 cr, then eventually you go to 100 cr. So let's suppose you're 34 or 35 right now. So within, let's say, by the age of 60 to 65, this is something that you can really achieve. Now, a lot of people want to know, while chasing this corpus, that how much exactly, we should be investing in it, and in what asset classes it should be investing. Should it be equity, stocks, debt, right? Now, honestly, nobody can give you these answers in just a 10-minute video, or neither, you should listen to someone and just, start following that plan, because investing anyway is a very dynamic world. It keeps on changing, right? But there are certain things that you should definitely be aware of. These are sort of like universal principles around investing. and this will help you always when while making an investment decision. So number one is basically about savings rate. Now savings rate is something which you actively save from your active income every month. So for example, you earn 1 lakh rupees a month, you let's say save 30,000 out of it. So obviously 30% is your savings rate, right? So let's suppose in today's time you have, let's say, a savings rate of 20%, right? Now, a lot of people, what the mistake that they make is they have this assumption that your savings rate should always be the same, throughout your life. Most people believe that 20% savings is enough. And so, although their, active income is increasing, so for example, they've gone from 1 lakh to 2 lakhs, and now they are going to save 20%. So, which means now earlier they were saving 20,000, now they're saving 40,000. But this is actually not the right way to do it. Eventually what should happen is, if your income is increasing, you should also increase your savings rate. Let's suppose if your savings rate was earlier 20%, you should surely jump it to 30%, then 35%, then 40%. Because eventually what you need to do is that you need to have bigger investments coming in every month in order to have that compounding magic even better. Because let's be honest here, somebody who, let's say, was a corpus of 1 lakh rupees, somebody who is, let's say, a corpus of 10 lakh rupees, somebody, let's say, was a corpus of 1 crore rupees, despite making even a 25% returns every year, somebody who has a corpus of 1 lakh, 10 lakhs, it doesn't really add much to their net worth versus somebody who has a 1 CR, right? So your goal should be to keep increasing your savings rate every year so that you reach that 1 crore number as early as possible. Similarly, after 1 crore, you reach your 10 crore corpus as early as possible and achieve your 100 crore corpus, luckily, by the time you retire. Now, other very important point is focus much more on your primary income source. Now, a lot of people make this mistake, after watching, these investing videos. And this is, even applicable for this video. A lot of people might think, it's all about investing. Well, it is, obviously investing is a very important part of this, but growing your active income is the most important part here, right? Because the earlier point that I mentioned about savings rate, if your active income is also, let's say, not growing beyond inflation, and something which is not happening at a really good pace or at a really good percentage, then obviously your savings rate will not increase by much. So your focus should always be on increasing your primary income, because anyway you can have experts, where you can, let's say, you can you have PMSs, you have mutual fund distributors, and let's suppose you, in case of debt products, you basically don't have to even get a particular mutual fund distributor in a product, let's say, like peer-to-peer lending, where, let's say, you get 12% returns without any market volatility. So this is also something, such type of options can also be explored, right? Now, if, let's say, your primary income is not increasing, that is where your actual focus should be right now. Because investing, let's say, doing an SIP of 5,000 a month, 10,000 a month, won't really happen. You should obviously do this for your learnings. That's obviously there. But let's suppose once your active income is kind of increased, your savings rate has increased, that is when you don't want to make mistakes around investing. Your asset allocation should be perfect. Your uh, chances of losing money in any of the investments should be as minimum as possible. Uh, so that is how you should focus on your active income and balance, basically. So what I'm trying to say here is that you should try to maintain a very good balance between your focus with regards to investing and your primary source of income. Now, this is the very last tip, and let's say the most important one. During these journeys, a lot of self doubt is also there, right? You might feel that you're not going in the right direction, your portfolio is, let's say, not big enough, you're not growing at the pace you want to, you're not generating those kind of returns. A lot of this will happen. But what I have heard from my senior investors is that wait till your 40s, keep doing what you're doing, have faith in it, have patience. Because what happens basically after 40s is a lot of your life goals, your life expenses are almost sorted. Where your life is going. Number two, after 40s, most people, most professionals, businessmen are in the prime of their life in terms of their income. So your portfolio has shaped a lot. You have learned a lot. You've gained a lot of experiences around investing, both negative and positive. So once you reach 40s, you kind of have that wisdom with you, and you're almost very sorted in the sense that you have uh, you become mentally very strong, you become mentally very stable in terms of your portfolio, in terms of your job, business, and life. Not saying this is 100% true for everybody, but this is basically talking on the lines of patience. You basically have to keep reminding this to yourself. You have to wait till your 40s, right? You Once you reach there, a lot of things will be plain and clear, a lot of things will be sorted, and you will be on the path of achieving that net worth that you actually deserve. Now, another tip in this journey that might help you is that during this journey you'll encounter a lot of opportunities. Shiny object syndrome, basically, key this particular real estate that you should be investing in, maybe this particular asset class you should be investing in, this is something which is coming new in the market, right? Because investing market is anyway very dynamic. So don't invest in something which you don't understand, right? For example, crypto. If it is something, maybe a lot of people are generating healthy returns, a lot of people are making good returns, which is fine for them, right? If let's say they are deeply involved into it, kudos to them, congratulations to them. But if let's say you are not sure about it, don't invest in it. And anyway, if let's say you feel that you're, let's say, not disciplined around investing, and this is something which you don't want to time your spend on, obviously, get an expert, get a wealth manager with you, explore a lot other options, let's say, which let's say suit to your investing style, right? Which does not give you that much headache. So that is completely upon to you. Also analyze, what kind of investor you are, what kind of discipline you generally have, what kind of relationship you have with your money. That will also help you in understanding, how do you want to shape your portfolio, how do you want to shape your investing journey. So while bidding goodbye in this video, one more point that I wanted to make was, see, 100 crores, honestly, we have also, used that number just for the thumbnail. But who really cares about 100 crores, right? It's all about the mindset and having that patience, right? If let's say you do not get, to the target of 100 crores, you might, let's say, get to a target of 80 crores. Somebody might get to the target of 50 crores or 60 crores. Now, even these numbers are, let's say, unimaginable for most people, right? So it is just about having that mindset. Whether you reach 100 crores or not, whether somebody reaches 80 crores, somebody reaches 150 crores, doesn't matter. It's about creating that wealth for you and for your family and for your future generations. That is much more important, and that is what we actually wanted to present in this video, and I hope we did, right? So thank you so much for listening to the video till the last. Do subscribe to the channel. We'll keep bringing more such stuff. We are also bringing a lot of podcasts where you can learn from somebody's experiences. So do check it out and do subscribe to the channel. Thank you so much.